This is Scott Bauer on the floor of the CME Group. And, what could be said about this market, the S&P market overall here? Velocity and momentum, right? We're seeing just incredible buying going on right now. And what is it fueled by? Is it fueled by, the prospects of the tax reform, which maybe are becoming a bit more realistic right now? This morning, a big upgrade in Microsoft, which maybe fueled all the tech stocks. Whatever it is, the S&Ps are on track to close today for the sixth straight record high, and that would make it the 41st time this year of record highs. Really, it's just a trend that you have to follow at this point here. On the economic front, the economic indicators that we've been seeing recently have been pretty rosy, much better than expected. We do have a jobs number tomorrow morning, which is expected to be pretty light, but most analysts are really looking at that and saying this is one we might be able to just kind of throw to the wayside here because it's going to be so skewed from the hurricane. So tomorrow's number may not be quite as important as we typically see for a jobs number, though whatever revisions we get from August and maybe even July could add into what the market is doing right now. Next move for the market, though, you know what? It's going to be all about earnings. Earnings start in earnest in about a week from now. And even though, we're still seeing some modest expectations here, that will be the focus. And if earnings can really hit top and bottom line here, then who knows what the upside has in store here for the S&P market. We do have some very, very solid support, and it's kind of hard to say where is the support in this uprising market here. Down at the 2480 level, everything above obviously is all brand new highs. In the S&P mini option complex, you know what? With volatility as bad, or should I say not bad, but as depressed as it is, option activity is still very, very brisk with heavy call buying. Typically, the ratio of puts to calls being traded is about 3-to-1, 3 puts for every call being traded. Over the last couple days and yesterday, that has actually decreased, so we're seeing much more call buying. That ratio is down to about 2-to-1 now. Yesterday, the heaviest options that traded in the E-mini complex, yes, there were some March 2200 puts going all the way down to the 2200 line out to March. But on the call side, very heavy buying in the December 2600 and 2640 call strikes. So opening positions there, lots of upside. With volatility depressed the way it is right now, the E-mini options are expecting a move to Friday of about next Friday, that is, the 13th, of about $18, and going out 2 weeks to the October 20th expiration, a move of almost $30 at this point. This is Scott Bauer on the floor of the CME Group.